Hey guys, welcome back to Reserved Investments. It is 3 o'clock in the morning. I'm tired. My face is breaking out for some weird reason. Tomorrow I go to a dermatologist. We'll get that resolved. But in the interim, I'm here to talk to you about the 4 factors of control as it relates to investing and also alternate asset investing. Because what we do on this channel is, again, just quick recap, this is a collectible finance channel. Now, it's been very interesting, especially the last few weeks, because I uploaded several videos on the stupidity of Pokemon and the fact that the Pokemon Company is going to be upping production to 9 billion Pokemon cards being released this year into the open market. And I've also talked about how nostalgia is a lie, and we discussed vintage video games. Are they a waste of money? Well, in today's video, we are going to be talking about the factors of control. Now, this is a very important concept when we apply it to investing. And I got to explain this a little bit because I have people that come to me and they say, hey, Sean, you're one of those elites. You keep pushing index funds, you push stocks, bonds, mutual funds, and ETFs and the like. I'm a simple guy that just wants to invest in something that I have 100% control in. Now, there's a lot of people, and this is what becomes very appealing to individuals of a certain mindset. They gravitate towards gold, they gravitate towards silver, they gravitate towards cryptocurrency, they gravitate towards collectibles and antiques because they believe that if they own these particular items, they have more control over the asset class in general and when they go to sell. Now, to be fair, I'm not trying to cut anybody up on this particular YouTube channel. It's not what we do here. I am going to say, however, though, they are being misled. There is no such thing as an asset class that you are going to have 100% control over unless if you're somebody that is forming your own business. You are putting everything into that business and you are the sole owner, you are the sole operator. And even that, there's still a risk that you are not going to have 100% control over everything. And I want to make that very clear. There's this idea, and it seems to be more of an American concept than a global concept. There's this idea where if I have a gold bar, if I have cryptocurrency, if I have Pokemon cards, if I have comic books, if I have rare coins, whatever it is, antiques, art, whatever it is, I have 100% control over this asset class versus that of the guy that is investing in passive mutual funds or even active management mutual funds or stocks, bonds, ETFs, and the like. That is 100% false. Let me explain it to you. If you buy, let's just use this as an example, an ounce of gold. You go to the market and you just want to buy an ounce of gold bullion. Notice I didn't say rare coin. Notice I didn't say gold coin. I'm just talking about gold in bullion form. And you say, I want to invest in gold. Okay, you can do that. I think gold right now is trending for between $1,700 and $1,800 an ounce last time I checked, which was probably 2 days ago. So I know it's somewhere in that range. So you pay your $1,700 to $1,800 an ounce and you get your ounce of gold and you put that in a safety deposit box. You are 100% correct. You have complete ownership of that asset. And guess what? The government doesn't know you have it. Nobody out there, unless you choose to tell them that you own that particular asset, is going to know that you have that particular item. And we could substitute gold. We could use an example, a high-end Pokemon card, a comic book, rare coin, piece of artwork, whatever it is that you want to use as that example will suffice. Now, this is what you're not understanding. It is true that you didn't have to give up any personal, any financial information. You didn't have to provide your social security number to anyone. The IRS doesn't even know that you have that particular asset class. It is 100% private. It's 100% portable in most cases. You can carry it with you. You can put it in a safety deposit box. You can put it in a home safe. But this is what you are missing. The market for that particular item in most cases is a very niche market that you do not have direct control over. That being the case, it is true you can choose when you buy an item or an asset like that, you can choose when you sell it, but you have no control over the market in general, unless if you have the ability to manipulate that market. And this is why antiques and collectibles have become very popular as of late with a lot of people that are educated in finance, because they can come in, if they know how to manipulate this market, they can make a lot of money on Pokemon cards, Magic the Gathering, vintage comic books, rare coins, vintage video games. Yes, looking at a certain grading company and certain auction houses at present time. No disrespect, but let's be realistic. These are unregulated markets. It's just like why cryptocurrency is and was so popular. Because certain people can come in, you can pump and dump that market, and you don't have to worry about the SEC coming after you. You don't have to worry about the government in most cases, looking at you, Celsius, coming after you in general, as long as you're not running a scam. So when we talk about factors of control, you have to understand that in certain cases, it's an illusion. Now, there are 4 factors of control that I want to introduce you guys to so that you understand the mindset of that of an investor. And I apologize. I know a lot of hardcore collectors watch this channel and they get mad, or they say something to me in the comment section, or they send me a nasty email. Look, guys, I got to explain this one more time to you guys. This is a collectible finance channel. I'm not here to hold your hand, walk down memory lane, and talk about Pikachus, Planeswalkers, Sonic the Hedgehogs, Marios, and the like. I love all that stuff too, but that's not what we do here. This is collectible finance. With collectible finance, you cannot argue that antiques and collectibles are ultimate excellent asset classes if you do not understand the basics. And there's a lot of people going on YouTube, going on TikTok, which, believe it or not, up until last Tuesday, I did not have TikTok downloaded on my phone. I never thought I would ever use TikTok, but now people are sending me links to TikTok videos. It is completely crazy. So I actually had to download the TikTok app. I never thought that I would do that in a million years, but here I am. Never thought I'd be on YouTube either, with that being said. So what are the factors of control? Well, there are 4 factors we're going to go over. The first is knowing and understanding your risk tolerance. Look, I talk an awful lot about how a lot of you would be better off putting your money initially into traditional asset classes. Then when you get financially established, you can then start to diversify in antiques and collectibles and other alternate asset classes over the long term or even the short term. Now, a lot of you take issue with that. There is one demographic who has every right to take issue with that particular piece of advice. If you are watching this channel and you are 68 years of age, 70 years of age, 75 years of age in certain cases, by all means, most likely an S&P 500 index fund over the long term is not going to be your best friend, because if you live in America, the average life expectancy of an American male right now is 76 years of age. So if you're 70 watching this video, I obviously do not expect you to take all your money and put it in an S&P 500 index fund. That's why I do not give investing advice. If you notice, this channel is pretty much utilizing examples when we talk about investing. I do not give investment advice on this channel for that reason. However, if you're somebody in your 20s, 30s, 40s, hell, even if you're my age, 45, 50, 55, most likely, if you diversify into an S&P 500 index fund and you're able to hold it for the next 10, 20, 30 years, you're going to do quite well. All statistics, all evidence shows us that. The longer you hold it, the better your return in most cases. Now, with that being said, there's a lot of people out there that do not understand their own risk tolerance. And you guys do stupid stuff. You go into cryptocurrency, you go into some of these alternate asset markets and collectibles, and you go online and you tout that these are unregistered securities, there's no regulation, and oh my gosh, these markets are the panacea of wealth creation. And there's nothing more contrary to that statement that is true, meaning that statement is false. When you get into the market and the minute something happens, you then want somebody to come in and save you. We're seeing that right now with cryptocurrency. There are people pleading, hey, I got involved in this particular market. It was a scam. I need the government to bail me out. Well, guess what? If we were talking about regulation when that market was hitting all-time highs, you didn't want to hear it. But now that the market's in trouble, now that certain cryptocurrencies are falling off the radar or decreasing in value, or heaven forbid, you put your money with Celsius or some of these other crypto less than cellular, let's word it that way, companies, guess what? Now you want regulation. Now you want assistance. It doesn't work that way, guys. These are unregulated asset classes. You need to understand your risk tolerance before you invest. And that includes the antiques and collectibles trade. Look, I have a video coming up. A lot of you guys are going to hate me for it. If you look at vintage video games right now, graded WADA vintage video games, you go on Heritage and you start comparing prices to where they are now to where they are when this bubble started, when Sean with Reserved Investments told you to be careful of this market, you're going to see some of these games are dropping off as more come to the market, as the hype dies out and dissipates. I warned you about that. Some of you didn't listen. So now some of you are reaching out, Sean, the market's going to come back. You don't understand. It's just a lull due to the overall economy. Well, if that's the case, how come rare coins are hitting all-time highs right now? Rare coins didn't do that. Comic books, to a certain extent, unless if you bought Werewolf by Night 32 during the hype, or Amazing Spider-Man 300, first appearance of Venom during the pandemic, you're doing okay right now too. It's certain markets are more speculative, i.e. more risky than others. You need to understand your risk tolerance between getting involved in these markets and knowing what your goals are. And this is why, when I talk about the antiques and collectibles trade, I always tell you there's only 3 markets that govern the antiques and collectibles trade: speculative, established, and mature and sophisticated. And I assure you, Pokemon cards, collectible card games in general, certain comic books, vintage video games, a lot of those markets, they're not yet established, and they're sure as hell not mature. So what market class do you think they belong to? Speculative. Speculative markets have the most risk, especially over the long term. If you get into speculative markets, you make your money, you sell into the hype, and you get out. Let me repeat that again. You sell into the hype. You don't buy into the hype simply because Disney Plus has released a series on Moon Knight or Boba Fett, and now you get it in your mind, I gotta own the first appearance of Moon Knight, man. I gotta own that Rocket Fire prototype Boba Fett action figure because Disney Plus just greenlit a series that no one's going to remember 10 years from now called The Book of Boba Fett. I got to get my money invested in that market now. That is a fool's game. Next factor of control: being aware of how tax rules affect your investments. Are you aware portfolio income, by and large, is taxed at a lower rate than any other form of income? Meaning people who have money sitting in brokerage accounts, you get a 1099, you go to your accountant, you think you're going to get slapped in the head with taxes. The actual tax rate in most cases for a lot of portfolio income is less than earned income. Income that you are being taxed on from going and working a job. Believe it or not, guys. When we talk about collectibles, when we talk about other alternate asset classes, there are very little tax advantages to owning, buying, selling collectibles, investing in these markets. You need to understand this. If you do not understand the very basics of tax law, you are going to get slapped in the face with a stale donut. I have people that come to me all the time that tell me, Sean, I got a 1099 in the mail and I ignored it. You realize at some point, the IRS is coming for you. You're going to get either a letter or, depending on how much, they're going to come and they're going to knock on your door. And you are going to have to pay the piper at some point in time. This is why, very unpopular view, I'm going to state it, I was very much for eBay deciding to lower the threshold to which they send 1099s to people. Because in all honesty, eBay's doing you a favor. So is the IRS. If you get a 1099 and you sold $2,000 worth of items last year, guess what? you now get a crash course on tax law. You now get a crash course in bookkeeping and accounting, because you're going to go to your accountant, you're going to go, well, I ain't paying taxes on $2,000. Here's my expenses. And that's going to get you start thinking like a business person, like an investor. And once you learn that, you can apply it to other markets, other opportunities, and you can better yourself. That's how we learn and grow, guys. That's how wealth is created over the long term, through knowledge, through understanding, through empathy, through connection. That's why that is a good thing for some of you. Next, you got to be mindful of the fees you pay. This is what cracks me up. Little Timmy S. Poindexter comes to me and says, Sean, I'm not giving Wall Street my money. How dare you tell me to put my money in an S&P 500 index fund? Let's review. The current expense ratio on most S&P 500 index funds offered through Vanguard, Fidelity, T. Rowe Price, and Charles Schwab is 0.04%. Now let's translate that. That means on $100,000 invested in that fund, you're only going to pay $40 per year. Some of you guys think nothing of paying $1,000 for a collectible, watching it go up to $1,500, selling it on eBay or consigning it to an auction house, and paying close to 20% in fees. But yet you'll come to me and tell me, Sean, I don't want Wall Street. I don't want those Wall Street guys to get my money. Are you aware the more money that you accumulate in a brokerage account, the less fees you pay? Because most brokerage accounts, depending on what you're investing in, they actually have a tiered system where they charge you accordingly. This is why millionaires pay less in fees than that of the average retail investor. They know that. They work the system to their advantage. They're not doing stupid things with Pokemon cards, Magic the Gathering, vintage video games, and the like, arguing, I don't give my money to Wall Street. Well, no, but you'll give it to an auction company in the form of 20, 30, sometimes 40% commissions, because a lot of you guys don't know how to scrutinize a contract from an auction company that is put in front of you. And you don't realize that not only are they taking 20% from you, they're also charging the buyer 20%. That's why I tell you guys, you want to get rich in the antiques and collectibles trade, form an auction company or form a grading company. Now, before I go off on a tangent on that, there's one more factor of control that we got to talk about before we end this video, and that is looking for conflicts of interest. Now, if we talk about financial terms, you're going to hear this described as conflicts of interest in your advisor. Meaning if you go to a financial advisor and they want to sell you all these particular financial products that you may not need because they get a commission off that, that is signs of a conflict of interest. When we talk about antiques and collectibles, you got to understand that technically the conflict of interest is how the overall market is performing and who is manipulating that market. Some of you guys come to me and I have to laugh. I get into a lot of heated discussions with the gold bugs, and nothing against the gold bugs out there. I get it. If you have $250,000, $500,000, you're financially established like me, and you want to devote a very small percentage of your portfolio to investing in gold and precious metals, by all means, you do you. But the average person should not be investing in gold and silver. And every time I get into a debate with these people, one of the things that comes up is, Sean, you don't understand. The government and the financial industry is manipulating the price of gold, so it's not an appealing investment. Well, here's my question to you. If you honestly believe that the government and the financial industry is doing that, and there is some truth to that, I'm not going to lie, I'm not blind to that. If that is the case, why are you trying to bet against the entire financial industry and the government by investing in that asset class? It's no different when the Timmies come to me and they go, Sean, you don't understand the popularity of video games. I'm putting all my money in Wada Graded vintage video games. And again, got to repeat this. I have a video that's going to premiere soon on this channel where we're going to talk about that market, because a lot of that particular market was pretty much manipulated to the point where it was pie in the sky, man. And now as more of these games are discovered, as more are coming to market, there's people that are like, well, wait a minute. I see the last one sold for like $15,000. This one's only selling for $5,000. It's the same grade. I don't, why? That's a very scary, risky market. Again, there are only 3 markets that govern the antiques and collectibles trade: speculative, established, mature, and sophisticated. If you're investing in vintage video games, hate to say it, you're not investing in an established market. You're not investing in a mature, sophisticated market. You're investing in a speculative market. You've got to know your risks. You also got to understand the conflict of interest on the other side. Market manipulators, market makers are able to come into these markets, do what they will, manipulate them, and leave the average Timmy, Kimmy, or Poindexter broken and bankrupt. And that's really where we are in the year 2022. The average collector, the average alternate asset investor, they do not have the control of these assets that they think they do. And it's very sad because they've been so programmed, they've been so wired to doubt Wall Street, to not trust the government, that they make very poor decisions with their money. And these are the type of people, I'm going to be very honest with you guys. At the end of this video, I don't know how many of you are still watching. These are the type of people, when they get in their 40s, when they get in their 50s, when they get in their 60s, they get very angry, they get very bitter, and in some cases, they get very violent. You know, I have other videos on this topic that are going to be coming on this channel, and it really breaks my heart, because if we could get into a DeLorean time machine and we could go back in time when these people were in like their 20s, even their early 30s, it's not too late to change that mindset, to just take them by the hand and say, hey, if you would put this money right here, just this amount of money every year in this mutual fund, you would be okay. And it's very hard when somebody gets into their 40s, 50s, 60s, even later, of course, their mindset is already set. And usually that's when chaos ensues. You know, I was reading a horrible article about how men in their 40s, 50s, and 60s are at risk for, I hate to say this, taking their own life. I'm going to word it that way to be kind to the YouTube algorithm. And if you look at what's happening just in the way that we present the dating world to young men with the toxic red pill ideology that's all over the internet, from investing in cryptocurrency, investing in alternate asset classes, gold, silver, collectibles, versus that of traditional asset classes, a lot of the information is toxic, and it is literally destroying lives. And that's why I do this channel, guys. I've said this before. I do not have any type of bias toward one market or another. I just want you to be able to live your best life. If that's something that you can relate to, consider subscribing to this particular channel. If not, hey, you're probably going to be one of those guys that watches my content and does a video in a room in their parents' house talking about how great investment Pokemon cards are, and looking at certain individuals who already had money that decided to enter that market. They manipulated the market, and now you're looking up to those people saying, I want to be like that guy, not realizing that guy had a leg up in life. That guy was also educated in finance. He knew how these markets worked, and he was able to take advantage of it. I want you to have that same knowledge level. I want you to have that same self-awareness and understanding. And I wish you all the best. Thanks for watching. Have a great day. I almost said have a great guy. That's kind of weird. Have a great day, and I will be creating more content in the days and weeks to come.